Australian home prices have bottomed? Probably not. This is an article by Dr. Shane Oliver, who is AMP's chief economist. Key point: capital city prices so far in March are set for a 0.6% or so gain. The full impact of interest rate rises has yet to be seen, with home buyer capacity remaining well down. While Australian property prices may have bottomed, the case for a 15 to 20% drop in property prices remains, with the recent bounces likely to be shortly lived. From their high last April to their low last month, the national average home prices have fallen by 9.1%, making it the biggest fall in CoreLogic's records going back to the 1980s. Let's have a look at some of the negatives moving forward for the Australian property market, and these are only some of them. If you want to get them all, please make sure to read the whole article. The first one is that the full impact of the rate hikes has yet to be felt. The next one is 880 fixed rate loans are set to expire this year, which means that mortgage rates will reset from 2 to about 5 or 6%. Household servicing debt payments as a share of income have already risen to their highest level in more than a decade, resulting in a higher squeeze on household cash flow. Australian economic conditions will deteriorate this year, as weaker global growth impacts our demands for imports. Rate hikes bear down on domestic demand, as pent-up demand from the pandemic is exhausted. And this combines to push unemployment higher. Higher unemployment will likely add to mortgage stress. So there we have it, just a brief summary of Dr. Shane Oliver's article, Have Australian Property Prices Bottomed? Probably not. If this interests you, make sure to read the full article.